Yes.
What are you doing, and what do you think our viewers should be thinking about when it comes to investing?
Well, thank you. So what we are talking about now is slow growth in the second quarter, but growth picking up meaningfully in the second half, and financial conditions easing. So we are basically back to a cyclical growth story again. So we are back into buying cyclicals, back into buying technology, back into buying emerging markets, because the stimulus, the monetary stimulus in the U.S. will probably cause the dollar to go down some.
If you're right, and first of all these central banks ease and keep things easy for a long time to come, you should basically be buying everything, because if you're looking at these incredibly low yields, where else are you going to be able to go?
Absolutely. I think you have to buy global equities in general. Yeah. It's really more a question of where it is going to be, where the action is going to be far more than others. I think from a sectoral standpoint, cyclicals probably win out in the second half than defensives.
And then finally, in terms of buying, tech, for example, you thought was not something that you were buying. I mean, like 2 weeks ago, you didn't love tech. You loved certain types of tech. You didn't love consumer tech.
Well, so exactly. So I think if cyclical growth picks up,
right,
and I think companies like software and old communications or new communications companies, old tech companies, right, those companies do reasonably well.
And just so we're clear, and I know we got to wrap, but you would just completely write off, or how much do you write off China trade? How much do you write off what happened overnight potentially with Iran and what that holds? How much do you write off what happened in Philadelphia?
You know, equity investing is about risk taking. It's not, nothing is sure or guaranteed ever. And we have had these risks in the past. We had the Greek crisis, we had Brexit, we had all sorts of things. Despite that, the markets have done well. Right. And they're going to do the same over the next 12, 18, 24 months.